today's episode, we're going to cover the SOFI stock, which is sitting at one of the most important levels on the entire chart right now. Bulls have finally started reclaiming momentum, but there's one resistance level that could determine whether SOFI is headed back towards $20 and beyond, or if another rejection is coming. Let's start off here with the monthly chart. Right now, the SOFI stock is at $16.67, and we can see here that the Stochastic RSI are low. We're starting to reset. This could take a while though. We could drag here, or we could just start pumping back up. Now, one thing I'm not liking is that this could turn into a head and shoulder pattern, left shoulder, head, and we cannot get above this white line, this 21 moving average. This could be a right shoulder, and this measured move will take us pretty low. Now, another way that I'm looking at it is if we could get back above this 21 moving average, this could actually be some type of a falling wedge, and this could take us up to about $34. Now, we did kind of break out of this falling wedge with this green candle, but I'm not liking that right now for June we have a red candle. Now, we still have 19 days before this candle closes, but if it closes like this could be tweezer tops, and we could eventually start rolling over. Now, we should have some support here on the 50 moving average, which is at $12.06, but if we break that, I think this will trigger that head and shoulder pattern that could bring us down lower, possibly even to this point of control here at $7, or possibly even way lower than that. But overall, right now, with the stochastics being low, I gotta be a little bit more bullish. Let's see how this candle closes at the end of June. We head over to the 3-day chart. We see that the stochastics are toppy here. We're starting to roll over. As you can see here, this is what I was talking about: green candle, red candle, tweezer tops, and then we dropped here. You can see here tweezer tops, then we dropped here. Now, we are being held by the 200 moving average, which is at $15.45. It's imperative that we hold above this 200 moving average. If we lose this, then we could see more downside. We head over to the daily chart. Stochastics are starting to reset. The RSI is still stuck here. We haven't been able to get above the 50. Now, I'm liking this green candle. We are starting to get above this 21 moving average. Let's see if we could get the momentum to continue to eat up all these moving averages, but ultimately, to be bullish, we need to get it back above this 200 moving average on the daily. That's at $22.90. Let's see if we start rounding up here on the Stochastics RSI. On the 4-hour time frame, I'm liking the stochastics here. We're reset. We're starting to point up. The RSI is above the 50. We're also pointing up, but we are below the 200 moving average. If we're below the 200 moving average on the 4-hour time frame, we have to kind of be a little bit bearish until we're able to break this. So I will feel more bullish if we could get above the $18.27 level here, this 200 moving average. Now, one thing that I'm liking is that this is looking like a double bottom to me, one bottom, two bottoms, and if that's the case, the measure move to this could take us pretty much exactly to the 200 moving average, possibly a little bit above. Now, let's see what ends up happening when the Stochastics RSI reach the top of this level. If we get to the top and we're well above the 200 moving average, then that will be bullish because we could use this 200 moving average as support as the stochastics start coming down. But if we're still below this 200 moving average and we got to the top of the stochastics, we're probably going to end up getting rejected by this 200 moving average on the 4-hour time frame. We head over to the 1-hour chart. I'm liking this as well. This is a triple bottom, one bottom, two bottom, three bottoms. This is pretty much the double bottom that I'm seeing on the 4-hour time frame. And again, this is the measured move. This takes us pretty much above $18.50. Now, the stochastics are getting toppy here, so let's see if we can make that move before we start rolling over on the Stochastics RSI. And on the 15-minute time frame, the stochastics are toppy. This is about to roll over. We just got above the 200 moving average. Now, we need to stay above this 200 moving average in order to stay bullish. We lose this 200 moving average on the 15-minute chart, things start to get bearish, and we might drop down to this white line, this 21 moving average at $16.13. So overall, I'm a little bit neutral on this stock. I'm seeing some bullishness, but I could also see how we could fall down below $12 if we're not able to stay above certain levels. So ideally, on the monthly, of course, this could take a little while. We could make it to $34, but in order to do that, we do have to break above this 200 moving average on the 4-hour time frame. This is very important. But the first thing we have to do is break above this 200 moving average on the 15-minute chart, which we did. But most importantly, we have to stay above this. We could stay above this, then we could go and try to get above this 200 moving average on the 4-hour time frame. If we could do that, then the next battle is going to be this daily 200 moving average. If we could do that, then that $34 price range is more probable. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.